Hi, this is Randy Finney with Right Side of the Chart, and this is a closing market wrap for Wednesday, May 22nd, 2019. For members of the site, this video is largely a recap of the market analysis part of the video I did earlier today, although that video also included a handful, half dozen or more trade ideas, different sectors, commodities, individual stocks, so you may want to check that one out if you haven't yet. As far as the broad markets go here, we have I've modified the trend line here. I had a downtrend line on SPY coming in right around here where you can see the dotted line, and that one we broke out, back tested, but at this point looks like we're forming a symmetrical triangle, and those things can break either way. They're indecision patterns typically, and so we'll watch it. It's just enough reaction so far to make that upper trend line and lower trend line both valid. So there it is, whichever way this one breaks. Unless it's a brief whipsaw signal and snaps back in. If we do get a definitive break to the upside or downside, especially a daily close, upside break would probably bring us to that key 289.21-ish level that I'm watching on SPY, and a downside break bring us down to that 280-ish level. So again, the story remains the same, and I've been saying it now for a week or so here. We're smack between what I believe to be two pretty important levels. Resistance overhead and support down below. There's the failed breakout from in the SPY right here. Actually, that's more of resistance. I'm sorry, SPY failed at the 2018 highs. It was QQQ that had the failed breakout recently that went back down below. So either way, watch those levels. And even a breakout of the triangle could still keep us in this choppy sideways trading range. So don't expect it to last much longer, but that's certainly possible. So until we make a definitive break either to the upside here or the downside, that's the range we're in. Recognize it for what it is, and that's what we're seeing, some back and forth chop. So my outlook hasn't changed. Really nothing much has changed in the charts. I'm still expecting a downside break here and a downside break below 279.93 or so, or the recent lows really from back Monday before last, and that would trigger the next impulsive wave of selling. So that's how I'm currently positioned. That's what I'm expecting. But if we start to see evidence to the contrary, such as that would be the first step, a breakout here, then a breakout above the recent highs, that would certainly change things. There's a downtrend line on QQQ, similar, not exactly the same. This is not so much a symmetrical triangle, just a different shaped triangle pattern here. Qs have been a little weaker recently, and still closer to the lower end of the trading range, with 178 as a key support at the bottom, again from the lows from Monday the 13th, and about 186 up at the top. So until we get a definitive break, we could have more noise within this range, but stay flexible and be ready to move. If we do break in either direction, especially to the downside, things can happen very quickly. So you don't want to be caught off guard. Have a trading plan in place, whether you're long or short, bullish or bearish, where you want to buy, where you want to exit if you're wrong, or where you want to short, and likewise where you want to exit if you're wrong on your shorts. Let's take a quick look at the intraday charts on QQQ. Here's a 60-minute chart. Again, just to recap, both QQQ and SPY rallied up to my uppermost bounce target, reverse so far, especially QQQ still well below that level, and there's that similar downtrend line that I just showed you on the daily. Here's a not a great, not super well defined, but a potential uptrend line to watch. But again, more about the recent lows in QQQ was right here, and then there is some minor support below here on the 60-minute chart we have to keep an eye on. So we could punch that. What I'm getting at, we could pop that 178 level, especially intraday, hit 176. 75-ish and reverse and close back on or above that. So that's something you have to watch for. But ideally you want to see both QQQ and SPY smash through those levels impulsively. Speaking of SPY, there's that downtrend line I just showed you. There's that triangle type pattern. You can see it here on the 60-minute chart. We also have SPY recently failing at my uppermost bounce target there, and again there's that downtrend or the triangle pattern. So in the near term, keep an eye on that if you're looking for near-term levels to trade. For example, if the futures pop this level, I'll get to the futures here in a second, overnight, that could take us up to the next resistance level overhead. Likewise, a downside break could and I'll say this: we're at the apex of the triangle. So this thing is going to break one way or the other. I can't promise you there's going to be a sharp move in either direction, but I think there's a decent chance. So let me make that very clear. There's no more playing around in this triangle unless the lines happen to expand. You know, that is possible. Maybe we come down here and then start forming something, but we don't have any other reactions along this line right here. So that's pretty much the uptrend line the way it stands right now. At the very most, I could stretch it to capture that candlestick low right there, right here, from, so again, a 60-minute chart. That was from, if I can get my crosshairs on it, May 20th, this Monday. So we can come on, hit that, and still keep within that triangle. But as of now, it's got a little bit, I'm favoring this line, but again, you know, want to give it the benefit of the doubt, move that down there, but we don't have another reaction to validate that trend line yet, so I'm going to leave it right there for right now. And then finally, let's take it down just a little bit tighter here to a 15-minute chart. I shared this in the trading room today, 15 and a 5-minute. Let me see, let me give it to you on a 5-minute chart. No, let's go back to the 15-minute. This is probably a little busy. There's that downtrend line, so you can watch it today. We hit it in a lot of taps on there. Again, viewing it here on the 15-minute chart. So let me give you the uptrend line as well, and it looks something along these lines. So that's SPY. That will probably, well, that will have to be resolved one way or the other by tomorrow, probably with a gap up or down, above or below it, again, unless we happen to extend the trend line out there. QQQ, similar. Let's look at a 5-minute chart. I think it's what I posted in the trading room. Yes, it is. Take it in a little tighter. We had this minor downtrend line. Again, this is only a 5-minute chart here. Downtrend line starting on the 16th, last Thursday. Exclude that little high, comes in here. We had a breakout there, but as I had said at the time in the trading room, we had at the same time SPY was below its comparable downtrend, and so therefore that breakout didn't go anywhere. And that's why I always say I never trade, even though I trade NQ over ES, it's my preferred trading proxy. I don't ever take a breakout in QQQ or NQ unless I can confirm it with SPY, because as that was the case today, at the time QQQ broke out, it was fairly impulsive buying intraday. If you're watching the 1-minute charts, rallied us up to about break even, but at that point SPY hit the comparable trend line that it had, and so QQQ has come in and made a back test. So that's where we closed today. So we actually closed on support. So look, there is a decent chance that if the futures can rally, you won't see it here. It's not showing aftermarket trades or after-hour session trades, but we could have a successful back test here. QQQ could rally up, or it would be the NQ futures in the overnight session. And SPY, which I just showed you a second ago, there's that comparable trend line that it ran into right after QQQ broke out. So SPY could go on and break out as well, and there's some near-term targets. And here's what the futures look like. This has proved to be a big level. These are, you know, levels that I've had on this chart for a while. Same 60-minute chart I usually cover in the videos. 74.58-ish. We'll call it 74.60. That's so far capped. It's been capping the advances here. It capped this rally back here. It was support here. We had some reactions back here on it. So there's a level to watch, and of course you have a downtrend line that comes in a little bit above it. So if NQ pops that, it's got some work to do, you know, on both the upside and the downside. More so on the upside. By saying it has some work to do, I mean there's quite a few of overhead resistance levels that still need to be taken out. And again, nothing has changed on the daily charts, so to me I still favor the downside resolution, and that would take us down to at least 72.75 on NQ, the NASDAQ 100 futures. ES, S&P 500 E-minis, I'm still looking at this megaphone type pattern, descending megaphone pattern, and it's just done a great job of capping the advances. Look how many reactions along the way so far have capped that, and pretty much today we're just a hair under it right now. There's the bottom of the megaphone pattern, and here's that uptrend line. So these two taken together right here and here is that same symmetrical triangle pattern I showed you on SPY. So if you're a futures trader, you want to watch what's going on overnight, upside break could take us up to that next resistance, 28.92-ish. Downside break, you can see some supports here where it might take the S&P futures down to. And again, That's my preferred resolution. Even if we pop above, at that level, I'd be looking at this as a level to add short exposure again. That's where it capped the last rally. That was my bounce target on SPY. If we get there again, I'll say this. I prefer that we don't get there again. If we get there again, I would say I can tell you with conviction, I think there's a better chance they'll pop above it than the last time around. The last time around, I thought it was a golden shorting op, and I had a pretty high degree of confidence that that would be the max bounce upside target. This time around, since we've already tested it, while it would certainly be an objective level to short it again, I suspect they might pop it to run some stops, even if it fails afterwards. And if they do more than just pop it, then your next resistance up there at 29.17. So I would much prefer to keep the bearish case alive and strong, show me that there's just not a lot of bid for stocks and that any buying is being met with more powerful selling. And so that would entail us going down overnight in the futures and breaking across down below that uptrend line there, which could trigger some impulsive selling. And keep in mind, this will be, end of day market wrap. This will be a public video, which is typically just general stock market analysis. The major indexes, SPY, QQQ, S&P 500. But a lot more goes into my analysis, and part of what's going into there is semis. We hit our, we had our official trade hit the price our final near term, what I call the near term swing target. It was our third and my final target, so we closed out stocks the other day right before it bounced. I mean, we nailed the lows on that one so far, but we're almost back down to that level again. And make no mistake about it, and where I'm going with this plays into my broad market analysis. The semis have rolled over. This to me is just a major top. I've done extensive videos. I did an extensive video recently on the semis, a lot of coverage, and this to me is about as bearish as it gets, this breakdown. These are weekly candles. Yes, this week's candle isn't finalized yet, but two big red candles after a clean uptrend line break, big divergent high, bearish PPO crossover. I think there's more downside to come, so I'm not going to get into the daily charts and give you specific price targets because I will most likely be adding that back as another short trade soon. And what knocked the semis down today, and again, this is tech. The semis lead tech. They are the canary in the coal mine for the tech sector. If the semis break, tech's eventually going down with it. They tend to really be a barometer, if you will, for the tech sector. And so they've only just recently broken down. I mean, don't get me wrong, they're down quite a bit off the highs. I don't know what the drop is right here, 17 or so percent. But today the big news was Qualcomm. QCOM. I'm on a weekly chart there, by the way, and this is a weekly chart as well on Qualcomm. And Qualcomm smacked down hard. Here's it's all. The funny thing is, yes, it's news induced, but it simply triggers. It's the trigger, the catalyst for the move that's already priced into the charts. Qualcomm broke out to a new all-time high recently on the news, and at the time it did it, I said even before, when it ran up, my comments in trading room where we probably go on pop that high. There was a lot of momentum, and then that high would fail, and we would come back down here to 67.37. In fact, we see we closed the day at 69.31. That's a drop of about from high to low about 24% in just five or so days. Who'd have thunk it, right? Well, actually 5 days ago, this one's dated, let's see here. Move that down. Date is May 17th. So just 5 days ago, that's exactly what I predicted and said that stock would come on down here. Showed you there's a lot in the charts, many things, but this is a 10-year chart showing you the last 7 overbought readings, and without fail, you've seen double-digit drops in Qualcomm, and there's just other things priced in, but there it is, 67.37. Now we haven't had the bounce yet, but we've had a reaction because Qualcomm fell to my 69.37 target in just 5 days and stopped cold today. When you look at the 1 minute chart, here, go back to Qualcomm, and so it plunged down and pretty much hung on that level all day. So that's a reaction. It's not a bounce. I define a reaction as a bounce and/or a consolidation. Now, at this point, there's probably a bounce to come unless the markets drop. So that's the thing. When the tide finally turns in the market, and it has turned in the semiconductor sectors, this is where I would be going in pretty aggressively long for at least a bounce trade. I'll tell you, I did. I took a shot at a bounce trade, closed it flat for a very slight loss at the end of the day because it didn't. The bounce never materialized. And I'm also not liking what I'm seeing, in the futures as we head into overnight. Futures I feel comfortable with because I can stop out at any time. 3 in the morning, if a stop is hit, if something rallies, there's some crazy event that goes on and it causes the futures to go up. Yeah, I can quantify my loss, whereas in Qualcomm or QQQ, you're at the mercy of whatever the markets or this stock gap up at in the morning. So during periods of high volatility, I'll kind of default over to doing a little more futures trading, unless there's core positions which I'll hold. But that's Qualcomm. I just wanted to point out that in a bull market, what I was trying to say, bullish uptrend, that's where you go long and it's oversold, pull back to support. It's not oversold on the weekly, it's oversold on the near-term charts, and that's a pretty decent support there. Now, if that level goes, that's not good for Qualcomm. So we'll see what happens. I'm near-term neutral on it, just slightly bullish again, but you don't want to, I wouldn't add that as an official trade today on the site because, again, if the market breaks those supports I just showed you, we're right off the lows. We're going to have another downdraft in the market. The Qs are going to go down, tech's going to go down, and they will drag most of the semis down with it. So even if Qualcomm wanted to bounce off this level, it's going to face headwinds. Why? Because everything gets dragged down and forced selling. Qualcomm is a component of all the semiconductor ETFs, so when people are selling those, or shorting those, it's the stock itself is going to come under selling pressure. So let's just wrap it up here. I just wanted to make mention that these are ugly charts. A lot of stocks breaking. Intel already broke. A lot of the semis are broken. Tech is broken. And the last few days have been that grind fest in the market that I talked about. Again, right now, nothing has changed in my intermediate term outlook, so I'm still looking for more downside, and we just need to kind of break out of this recent trading range, so we can get the next wave of selling underway. And if that doesn't materialize and we start heading to the upside and popping above some resistance levels that should contain the bounce, quote unquote, then we'll have to adapt, or I'll have to adapt. And I'll let you guys know when that time is. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.